to today's wild market action. Joining me now is Stephanie Link, Hightower Chief Investment Strategist and CNBC contributor, and Paul Hickey, Bespoke Investment Group co-founder, along with CNBC's own Eamon Javers with the latest on what the White House is saying about these tariffs. Guys, good afternoon. Stephanie, is a 100% plus tariff for China priced into the market at today's close?
I think we're getting close, but it's still just so many unknowns, to be honest with you, John. And I think that the expectations are, though, getting lower and lower every day. And what I'm trying to do is think a little bit longer term and trying to find some really good quality companies that have had huge declines. The market is down 20% from its highs, but there are stocks out there, number one, number two companies in their respective industries that are down 25, 35, 40%. And so I'm just looking for companies that they dominate the industry, they've got good free cash flow, they have pricing power, but I don't know if I'm catching the bottom or not. I mean, I've been buying over the last couple of weeks, and certainly that has not been the right move, but I do think for the long term, 6, 12 months out, I'll be happy at least that I bought into this decline. I mean, fear and greed, John, is at 4. During COVID, it was 2. During the great financial crisis, it was 12. So you're getting pretty close, in my opinion, on a sentiment basis. And today's move, that it was up 4%, just tells you that there was, and then it, obviously didn't hold it, but just shows that there's a coiled spring out there.
A lot of cuts on people's hands trying to catch that knife, though, Steph. So you're not alone. Paul, there are fundamentals that get priced into stocks, and there's the optimism, the emotion also. We were at a very high level on both tariffs and at these levels where the Trump administration is at least setting them, nominally setting them at this point, would have an impact on both. How much of that, the fundamentals and the draining of optimism is priced in, you think?
I mean, I think you've seen a lot of the draining of optimism, as Steph just mentioned, with the fear and greed index. Yesterday it was actually at 2, so it was the same as it was during COVID. So I think there's a real degree of pessimism in the markets. A lot of it is deserved. Fundamentals, you can't really determine what the fundamentals are at this point because we don't know how long the tariffs will be in place and what impact that will have and what the ultimate outcome of these tariffs will be, the retaliatory nature. So it's really hard. But what you do have to take into account is the market. We've just seen one of the most rapid declines from an all-time high on record. So, the market is down for a reason, and those are the reasons. You've seen the VIX hit some of its highest levels ever. Within the Russell 3000, as of yesterday, only 15% of the stocks in the index were above their 200-day moving average. So we've seen these stocks react to what the news is, and it's not just a Mag 7 problem, as the Treasury Secretary has mentioned. The Russell 2000 is down just as much as the NASDAQ this year. So it's across the market. NFIB Small Optimism just saw its largest ever Q1 decline in sentiment. So across the economy and across small businesses, large businesses, there's a high degree of pessimism. So, that's a lot of that is priced into the market. And if we can see some positive news going forward, just like we saw rumors of yesterday, that's what the market will need to get going to the upside.